Well, Leon Kirkinis, CEO of African Bank Investments, has been doing the job for longer than younger staff members have been alive. In fact, 2 decades is a long time to stay in one job. But despite this and the fact that African Bank has faced some serious crises recently, Leon Kirkinis has no intention, he says, of stepping down. We get some insights into the man now with Tandisizwe Mahlutshana from Finweek, Sasha Naryshkine from Vestact, and as I mentioned, Mark Ashton, Finweek editor, with me all at the desk. We're also joined on the line by the man himself, ABIL CEO Leon Kirkinis. Leon, sorry, I'm messing up your surname there, so I'm going to throw straight to you and let you do more of the talking for us, because as I mentioned, you have of course had skin in the game. You own about 2% of ABIL's shares right now. You certainly know what the market has been saying around the outlook of unsecured lending, the concern around the quality of your book. Are things getting better when it comes to collections, because you have changed the way you incentivize staff?
Yeah, good afternoon to everyone and to everyone out there. You make me feel so old saying I've been there for 20 years, 2 decades, etc., etc. I feel very young, I've got to tell you. But one of the benefits of actually being in the business and in an industry over a long period of time, you see lots of cycles come and go, and industries always, no matter what cycle you're in, have their ups and their downs. And so, in your introduction, you spoke about a crisis. I mean, I'd certainly like to put the so-called crisis into perspective. So we had an increase in our bad debts during the course of this year. We did identify that we would be seeing more bad debts during the course of this year because of the supply side that was building up. And it's no surprise, whenever supply builds up in a marketplace, you are going to have more risk. So despite the fact that we had a higher bad debt, we still generated R1 billion after tax for the 6 months and a 25% return on tangible equity. So I wouldn't call that a crisis. I would call that a performance that we could have done and should have done better on, but it doesn't translate from that into a crisis. Just as to your second question, or to the question around has our collection started to improve? Yes, it has. So it's not only in terms of changing incentive structures, but it's also because of the amount of extra effort and energy that's been put into focus on the collection. So we're definitely seeing an improvement.
Yep. Leon, I've got 2 questions for you. One is around just the role of a banker. I mean, the bankers, mainstream bankers, have taken quite a lot of credibility hits in the last couple of years. So I guess my first question to you would be whether or not you still enjoy being considered a banker. And I guess secondly, the role of microlending in South Africa going forward. There's obviously a niche there. There's something you find very, very profitable. It's a good business. What do you see the role of an organization such as yours in terms of getting funding? And do you think you're going to be able to shuck off a lot of the credibility issues around the broader microlending sector in the next couple of years?
Yeah, very good questions and actually very interrelated. So the first thing is that most people look at business and sadly business themselves look at business often from a profit perspective. And really, from my perspective, the first thing you got to do is you got to say, does the business serve the needs of society in the first place? And only if it does, and does it do it in a sustainable way? And only if it then does do that, are you entitled to actually generate a return? And on top of that, will you get the support of the funders who feel that you're getting the right sort of balance between what's good for society and then what's good for the return profile that they look for? And there's no question that the role that of late unsecured lending has just gotten this really bad rap. Some of it deservedly, but mostly undeservedly, because really it's provided millions of people with the ability to actually look after their housing, education, and other needs, because they don't have collateral to provide security on to traditional banks. As far as ensuring that the industry remains or becomes has a better image over time, our role clearly as the market leader it is our responsibility to ensure that the industry deals with a lot of the perceptions and some of the realities that have to be dealt with, and they need to be dealt with decisively. So I'm convinced that whilst in the last sort of year or so, it's been really kind of pretty negative publicity. In the long run, always the right things come out, and more balanced perspective emerges always.
Leon, you spoke about sustainability, and I think that one of the things, you've had fantastic funding lines for the last couple of years. I mean, we saw bond issuance this week, and it looked like quite an expensive issuance relative to what you guys have done in the past. Do you think it's a more normal funding level of funding for the bank going forward?
Again, very good question. I think that perceptions feed a view of risk, and therefore when there is a heightened perception of risk, you are going to pay more than you would in more calmer environments. So we did issue the 7-year instrument. The actual extra cost was about 50 basis points to 75 basis points more than what we would have paid previously. And and that will kind of normalize when the environment normalizes. So I think over time you'll see the spreads come back down. It's just the nature of markets and cyclical markets.
Leon, any lessons that you've learned from the current market environment?
Yeah, great question. A really good question. Two lessons for me personally. The one is that communicate all the time when as things unfold, so that people don't feel like there's surprise that's coming. That's very important. And secondly, I think again, one lesson that comes out of this always, and is always something to take to heart, is whatever you're going to do, be decisive and don't sort of mess around.
What were you not decisive on then?
No, I think that take for example we saw the growth in unsecured lending, and we saw that playing out. We called it. We were the first guys to call it. And we could have probably reduced our loan sizes a couple of months earlier than we did. That's an example of that, and in particular in the Ellerines financial services environment. But you know what? It's not something you can do about the past. It's you learn the lessons, which is why it's such a good question. And going forward, you change outcomes into the future.
Stay with us, Leon, if you don't mind. I just want to ask Sasha, in terms of get your perspective from a shareholder who has been quite committed to ABIL's story from a longer term perspective, obviously. What do you think of, firstly, what Leon is saying right now? Does it instill confidence, and how do you feel about the share right now?
We've never had a problem with management. We class them as one of the best. I mean, typically we steer away from all banks because there's a lot of black box activity that takes part in the background that you don't know about. Remember, even a well-run bank like FirstRand, they wrote off a large amount and wouldn't take questions on it specifically because they're sensitive issues. Now, I think in part the market had issues with this because up to that point they'd felt quite comfortable. But the one thing I want to add to the funding specifically, you indicated they raised money at higher rates, but everyone has globally. So since that Ben Bernanke speech towards the end of May, everyone's had to raise money at higher rates simply because rates worldwide have ticked up. So I want to know how much of that is actually market conditions, all else being equal. So don't stress too much and view this more as an opportunity over a longer dated. I know that they're going to be prudent because they've survived a crisis before. And last thing I want to add, Jamie Dimon's daughter, and he happens to be of Greek extract too and a banker, when his daughter asked him in the last financial crisis, "Dad, what is a financial crisis?" he said, I don't know, every 6 to 7 years.
There you go, Leon. You certainly do appreciate that one. But Sasha, before we say goodbye to Leon, any questions that you'd like to ask management?
I think they've done a pretty good job on balance, kind of post this crisis. And I think the funding model is probably more important to the equity holders long run, and they seem to have that under control. What is the difference in the nature of the people who own your funding rather than the hedge funds and the short termers? What sort of commitments do you have from those people, and how often do you speak to them, the Treasury specifically?
Yeah, it's a very good question. The one thing that one of the big benefits we have in South Africa is that there's a smaller number of people that are that make up the capital markets and the debt funders in particular. And like everything in life, and it's true in your personal life as much as it's true in business, is you've got to build solid relationships that are trusted. And we've been very lucky and fortunate and privileged to be able to have a high level of communication and engagement with our funders, and there's high levels of trust, and it's something that we will never take advantage of, and are privileged to actually be in a position to have those sorts of relationships. So, communication, as I said earlier, is vital, and if it comes from a place where people view it that it's credible, then you're fine, always.
Leon, sorry, it seems like we've got so many questions actually to ask you, so hopefully you can stay a few more minutes with us. I just want to find out, in terms of diversification, you continue to say that transactional banking, becoming a fully fledged bank like the standard banks or First Rand, is certainly not something you aim to do. Africa's not on the cards right now. We know Ellerines is something that you bought. Perhaps, the question is not whether it was the right decision or not. The question is what you're going to do with it going forward, because it is a drag on earnings. There are some views that it might, in fact, post a loss this year. So what is going to drive growth into the future? Give us an idea of where your thinking is when it comes to where African Bank is going to be in 5 years' time, and I suppose what is going to define the bank for the next 10 years?
A very good question, and I think, again, and what typically happens when you're in a cycle like this, everyone then starts to talk about market saturation, that customers have too much debt and they don't have any capacity to borrow, and the market is like basically shut. The reality is that I think it's quite telling that we're not wanting to go into transactional banking, that we're not wanting to go outside of the borders of South Africa, because we see significant opportunities for growth in this environment. There's a time to grow rapidly, and there's also a time to grow far slower, given the way cycles play out. So 5 years from now, I'll give you a simple statistic. Only 20% of the housing stock in South Africa is capable of being mortgaged. And yet, where do the majority of people live, and how do they fund their housing, et cetera, et cetera? So the needs are immense and significant, and the growth, we're still a relatively young country in terms of the age of the population. So we see ample opportunities for growth into the future in what we do, which is the provision of credit to people so they can improve their lives. And I'm afraid it doesn't get much more sexy than that, but it is a very real calling that we have in our business. The
question that then just follow up from that is there a risk of you not being diversified enough, as evident by your very, very large exposure to the lower LSM groups in South Africa?
We diversified significantly across entire industries in the country. We have 3 million customers who really work in civil service, they work in the banks, they work in industry, they work in small mom and pop shops. So we are really very, very well diversified across the economic landscape of this country.
Leon, one of the questions that we get asked quite often is around succession planning for the bankers. There tend to be some quite high-profile people that have been in their positions for quite an extended period of time. Yeah. First Rand's a good example of a bank that's managed succession planning particularly well. From a shareholder perspective, how are you going to manage that process? I mean, in a lot of ways, you are the face of African Bank. What sort of reassurance or what sort of thoughts have you got in place going forward?
No, it's a very good point and a very valid point. You can never build a sustainable business into the future if it is perceived or actually is reliant on one person. That's just, you're creating a very weak business. So one of the roles that any chief executive have, and obviously given that I've been doing this for some time, is to make sure that there's depth in talent, and succession planning is not only there but visible to the market. So more and more you will see more and more of the depth of talent that we've built into the business. And I can reassure shareholders that we have a deep pool of talent. It just will become more visible in the course of the next over the next few months and years ahead.
So we expect some communication potentially on that, Leon.
No, don't read that I'm suddenly moving. No.
No.
No. Yes, so you'll see, as shareholders engage with the business, they'll see more and more of the people who really make up and run the business and gain a high degree of comfort from the guys who are here.
Appreciate your time. Thanks for joining us today, African Bank CEO Leon Kirkinis. So just a quick conversation at the desk here. What are your thoughts right now on ABIL versus the other banks? Because you've got money, you're thinking, where should I invest it right now? Why would you invest in ABIL relative to the other options out there, not just the banks?
Sure. Look, I mean, I'm talking my own book here because I did buy the shares. I think they were 15 Rand 20 or whatever where I bought. So I believe in the story. I think that I believe the funding issue, and I mean, we throw it to Sasha again, I do think it is expensive funding for the next 7 years. I think that margins are going to be very, very tight, but maybe it is just the new normal for lenders. I mean, I don't know, maybe I'll throw the question to you. Is this going to be the new normal for lenders? We've had fantastic cheap credit for a lot of time. These guys have got deep funding lines. I think that is the one differentiator that African Bank has over a lot of the smaller players, is they have genuinely deep pockets. They can make, there's enough fat in there without chasing the yield on it.
It's interesting you make that point, because remember that a lot of people who've been extending credit aggressively have been the bigger banks. You would have noticed that the Standard Bank's numbers from the period to end December, sometime in March, everyone should have been spooked then, because on a 40 billion Rand unsecured book, didn't they write off $1 billion? Yet, nobody even blinks, because typically there are lots of other moving parts.
But that's the value of being a diversified bank.
Yes and no, because what sort of quality of business are you writing if it's not your core business? I mean, this is African Bank's one and only business. Now, people say, well, Capitec obviously have the retail deposits, but remember that the majority of their business is doing exactly what African Bank are doing. Now, people have, for a long time now, said, oh, well, Capitec being more conservative, they write better business, etc. They've got better systems, they're newer, etc., etc. Now, suddenly, when we were looking, I don't know, around March, April at single-digit growth, suddenly we're looking at flat. So obviously the environment for them too has changed quite dramatically and quickly. In African Bank's case, remember that a whole bunch of offshore hedgies decided that this was a juicy short, and because there are not lots of shareholders who were standing in the way, in recent months we've seen Coronation, the PIC say, okay, we're standing in the way and we're happy to buy at these specific levels. At the end of the day, they're taking their chances, the shorts, just as much as the longs. And if that unwinds quite quickly, then, your purchase at rock bottom price, what did you say?
15.20.
Gee, you're clever. And Leon Kirkinis said we're also clever.
So does that mean we have to listen to you on your sell today on the trade of the week?
Well, I think so.
Because you're seeming to time. We're going to have to leave it there for today. Thank you so much for joining.